In my 150,000 years of studying the stock market, I don't think I've ever seen such a huge disconnect between not just the shareholders, the bulls, but also the folks that dedicate their careers to studying these things. A lot of the experts this morning are pretty excited about the call last night. Nicholas Gibbs said on the program last night, he says, Randy, didn't you notice the questions in the call were much more relevant than usual, much more about the future, much more about robots and the four-wheeled and the two-legged type. And this morning, the punditry has got it right. And they're talking about, well, you'll see. It's what some of the pundits had to say. And yet the stock is being crushed. Now, maybe we're back to this need for a little bit of a retrench before we go higher, because Google didn't miss by much. And you'll see that, of course, if you take a look, its stock is being crushed this morning. Also, taking the NASDAQ and everything else with it, the Dow is currently kind of in a almost vertical line down. So, all right, let's take a look at the news associated with all this and see what we can make of it. Let's start with a couple of Tesla executives this morning on X. Phil Dewan says he's really proud of this new release, referring to 12.5. And then Ashok Ellaswamy says, as version 12.5 is rolling out wider, feeling thankful for the very talented Tesla AI team. The energy in the team is great right now. Can't wait to get to work every morning. Also hearing from various people, very short so far. I haven't seen a ton of them, but quite a few people commenting on 12.5 this morning, saying that it is a step change. It is just very different. So then on a different subject, but a related subject, Elon started a poll yesterday, as you may know, asking if Tesla should take a $5 billion stake in xAI. Last time I looked at the poll results, it was winning handily, like 2-1. What do you think about this? Let me know in the comments below. I've said that I believe that this should not be a $5 billion cash deal. It should be a stock swap for Tesla stock, trading back and forth. But everybody seems to think this is, I mean, not everybody, but almost all the commentary I've seen on this from the people that you trust and like in the Tesla community seem to feel this is a very good idea, that xAI is going to be a very big deal and that Tesla could have a big win here. But part of the reason for this is the sense of having these two companies aligned more than just by business relationships, buying and selling between each other. So anyway, we'll see what happens with that. Irvine Police Department is going to get themselves a Cybertruck police vehicle. So there you go. A lot of people think that this will be the police vehicle of all times. Herbert Ong says this morning, these are the beginnings of some of the reporting this morning from analysts, okay? So let's start with CFRA's Garrett Nelson. He's downgrading Tesla due to lack of near-term catalysts. I think that's extremely wrong in terms of what does he mean by near term, next week? But we have a lot of catalysts between now and the end of the year. However, just listen up. Tesla stock was downgraded from a buy to a hold, 12-month price target of 240, which is certainly above the 218 we are right now, due to disappointing earnings. The launch of niche products like the Cybertruck has hurt Tesla's gross auto margins, but that wouldn't be a reason to downgrade. Analysts think Tesla might grow margins long-term by selling more full self-driving subscriptions and improving software. Yes, of course. Short to mid-term earnings growth for Tesla is uncertain, with analysts lowering their estimates. Tesla stock has been volatile, trading around 228, but now, of course, this morning, right now, at least at 218. Then this also from Herbert Ong reporting, if you're able to bring down costs, that will appeal to more buyers, says Neuberger Berman's Dan Flex. Tesla's ability to innovate and lower costs is crucial for introducing lower price models in the next 12 to 24 months. Tesla made over $890 million by selling regulatory credits to other car companies, and that didn't meet emission standards. Dan Flex from Neuberger Berman highlighted Tesla's strong balance sheet and cash flow. Tesla is positioned between product cycles with plans to launch lower cost vehicles and new platforms. Tesla is expanding its infrastructure and network supported by financial flexibility. Then Gene Munster, I watched a video by him and his points were, many are still paying attention to short-term vehicle sales. He thinks that new product rollouts did slip a bit. Like for instance, maybe the 2.5 vehicle that might have been as early as the end of this year is now definitely apparently in the first half of next year. He mentioned that he thinks robotaxi, the actual robotaxi vehicle might have slipped all the way to 2026. I didn't hear that at all. I think robotaxi, the robocab, the cyber cab, if you will, is still a 2025 product. But, you know, different people could hear the reports different ways. He said that FSD, this is another one that he didn't like, that FSD miles driven was at 150 million miles at the end of the first quarter, but then it was at 650 miles in June, which was good, million miles was good. That was good, a big increase. But he said if you look at the month by month, there was some reporting at the end of April that showed this huge increase, and he says it looks like it's fallen off in the ensuing months. I'm not shocked at all at this. I think that people that would have tested it and tried it, some of them would have said no. They would have said, I'm not ready. It's not ready. I'm not that interested in driving it yet. That doesn't mean they're not going to drive it later. It just means that they didn't think it was ready yet. So he was that caused him a little bit of a softening. He believes that things are being pushed out just a little bit. He says that nobody, not anybody he knows, is giving any value at all to Optimus yet. It's just mind-blowing to me. He says he personally owns shares. He says this company is solving big problems and the stock is undervalued. All right, then this from AJ this morning. He, of course, goes by Alojo, Alojoh. The more Tesla scales the energy business, extracts revenue from software products, and the less pure metal bending auto hardware business matters. With every passing quarter, looking at Tesla's auto margins becomes less meaningful. Also, looking at Tesla's auto margins ex credit has never been a smart thing. Credits have always been with only one trend upwards. Hence, stripping them out is nonsensical. It's arbitrary. Yes and no. I think that it is not a cost of goods. It is not a traditional part of the cost of the way to analyze margins for any company, and they could end at any time. So no, I think that it's a good idea to look at them both ways, look at them in and out. Everyone should get used to this. It's much more insightful to look at Tesla's total margins. So here are the facts about total margins. Total gross margins improved 0.6 points to 18%. Operating margin improved 0.8 points to 6.3%. Operating margins, excluding exceptionally high one-time restructuring charges, improved by a shocking 3.2 points to 8.7%. So he feels that this is what we should be looking at, and I couldn't agree more. Jim Cramer says, I know that Tesla stock is down in the after hours, but holy cow, what a terrific conference call. A tutorial on autonomy, humanoids, and batteries. Really impressive. Of course, a lot of people are like, oh no, Jim Cramer's happy. That's death for the stock. And so far, that has been true. But you can see it's not just Jim Cramer. All of the analysts, and there's more. I didn't show all of them. The analysts are saying, great call. They get it. Looks exciting. Also from AJ, he says, GM only sold half of the EVs they made in the second quarter. I don't normally report on the competition, but this time it's important. During GM's second quarter earnings call, GM's CFO said that GM built about 2 times more EVs than they sold in the second quarter. Filings show that GM sold only 38,000 retail units, but GM's CFO said on the call that GM produced 75,000. Wholesale means they got out to the dealers, but only half of those that ended up going to the customers. So this would be a receipt on what Elon Musk said yesterday. He said, look, one of the problems with Tesla sales in the first half of this year has been that the other car makers are making EVs that are not selling. They're just not good values. And that this is hurting Tesla sales because these manufacturers are having to drop their prices, which is causing Tesla to have to some to some level, also drop their prices and make special offers. I think one of the things that people are missing that nobody's talking about from the call yesterday, and I mean nobody, I couldn't find it in anybody's information. One of the big unknown yesterday, why were auto margins these regulatory items, why were they dropping? I think they were dropping because of those discounted rates on the interest rates for the cars. There's a cost there, and that cost is significant. This is Randy Kirk, by the way. If you haven't hit the like button, this would be a perfect time to do that. Hit subscribe and notify, and then join Patreon. Now, today, is it going to be an unusual? Well, maybe not. We're not going to have Scott this morning, that's for sure. He's on his way to San Luis Obispo for the big deal this weekend. So he's not going to be able to join me today. So I think I've got something pretty cool lined up for you at around the 11 o'clock California time hour. And then Jeff Lutz, I'm thinking, will be on tonight, and that should be a heck of a show. I'm looking forward to that. Okay, so let's look at the general economy now. Lots and lots of information, so hang in there with me because it's all telling a story here, and the story is still a little bit mixed, but I think we can start to gather some stuff from it. So the PMI, everybody talking about the PMI the last few days, U.S. business activity growth edged up to its fastest for 27 months in July. Adding to the flash PMI survey data from S&P Global, signaling an encouraging strong start to the third quarter. Growth disparities widening, however, with the service sector leading the upturn while manufacturing output slipped into decline for the first time in 6 months. So back to the services going up, manufacturing going down. The positive news was further marred by employment, which was growing at a slower rate, and business confidence in the outlook falling for a second month, fueled in part by rising political uncertainty about the presidential election. I can't imagine what uncertainty they're talking about. Competitive forces, meanwhile, meant prices charged for goods and services rose at one of the slowest rates seen over the past 4 years. Now, that's really good, but there was some renewed pressure on costs. Input prices across goods and services rose at the steepest rate for 4 months. Okay, let's see. Let's unwrap this just a little bit. So services are still going up at a pretty good clip, meaning overall PMI going up. Now, remember, these are purchasing managers giving their impressions, okay? This is not like data like, dollars and cents data. This is impressions from purchasing managers. So the impressions from these purchasing managers are, we're getting new the new prices that are coming in are showing now more acceleration going up. This would be really bad news for the Fed. The purchasing managers are saying that they don't have a lot of optimism about the next few months because the elections are causing a lot of confusion and a lot of fear, I guess you could say, a lot of uncertainty. That would be a better word. Okay, and then they're saying that the pricing that they're giving is flatter. So the outgoing pricing is not so bad, but they're also saying that employment is slowing, the increase in employment. So they're still increasing, still adding people, but that increase is slowing. And then manufacturing down for the first time in 5 months. So this is, it's a mixed bag in terms of what the Fed would be looking for, and it's a mixed bag in terms of the economy, but it would indicate overall a slowing, and we'll find out tomorrow more about the GDP comes out tomorrow. So Google Alphabet basically beat, but investors were not happy with the overall results, including a miss on revenues, advertising revenues on YouTube. And so the NASDAQ, of course, is down big this morning. Forex Live says wholesale inventories advanced for June by 0.2% versus the 0.5% estimate. So wholesale inventories not up as much. And last month they were up 0.6%. Well, you can't keep increasing your inventories unless you've got a lot of expectations of high sales coming. So the fact that inventories are reducing would either mean they sold them off nicely or that they're not expecting to see increasing sales coming up. Retail inventories ex auto were 0.2% versus the revised negative 1% last month. So the retail inventories for retail other than auto was up a bit. But it was, was last month, it was 0, but that was revised to a negative. So, if you got a negative month, you might need to replace some. But anyway, overall, I would say not a lot of interesting information there. Nothing that's going to indicate that that the economy is super strong or super weak. International trade deficit was 96.8 billion in June. That is down 2.5 billion from the 99 billion in May. Exports were 4.3 billion more. Imports also were more, 1.7 billion more. So all of that seems, okay. That's what you'd like to see: increasing imports, increasing exports, and the deficit on those going down a bit. The VIX this morning is back up to 16, and that's not surprising. So fear and uncertainty is what the VIX measures, and right now fear and uncertainty are up. All right, this is just breaking. We've got new home sales. Sales of new single-family houses in June were at a seasonally adjusted annual rate of 617 compared to the 640,000 expected. So that is a big miss. This is 0.6, and that's probably why the Dow Jones Industrial is falling rapidly this morning. This is 0.6% below the revised May rate of 621,000 and 7.4% the June 2023. So that's that the new home sales being down that much. That's down more than I would have expected. All right, so let's take a look at what the markets are doing. All right, we got the Dow almost down a full percent. Let's do things the way I normally do them, or I'll get confused. So Tesla is down 29 points this morning at 216.60. This is falling below another support level at 218. That doesn't mean that it's got to close below 218 to really bust through the support level. The stock appears to be starting to try to move up. In fact, all the markets look like they're trying to move up now again after really coming down strongly. Dow was down 357, NASDAQ down 373. You get the S&P down 79. You've got the Magnificent Seven all down, like Apple down 4, Google 6, Meta 16, Microsoft 7, and NVIDIA almost 4. The Cathie Woods all down. Also, although the numbers are not that big. A couple of them over $1, but most of them under $1. All right, let's go look at the percentages, which are the ones that everybody knows really matter the most. Okay, we got the Dow down almost 1%, 0.86. You got the NASDAQ down 2 full percents. You got S&P down 1.4, really big down. Tesla down 11.57. And the Magnificent Seven, it's mostly around 3, 2 to 3, 2 to 3 is the average. NVIDIA down 3%. The Cathie Woods, similarly, 2 to 3. All right, let's go ahead and look at where bonds are this morning. We have got the bonds. The 30-year is, I'm sorry, 30-year. The 10-year is down 1.4%. Okay, back down to 4.224. I like that location a lot better. I'd like to see it keep going down. We need to see the bonds going down more now at this point. You got the 2-year at 4.385. That is unchanged. And the difference there is now 16%, 16 basis points. That is a big break down below where we've been. So now we're starting to see a break on this 10-year, 2-year heading towards 0. Big deal, I think. 16 basis points. Remember, we were at 33 for a long time. We were way over 50. Lately, we've been in the 20s. Now, for the first time, it's a 1 handle or a 10 handle. How would you call that? Anyway, it's around 16 basis points. I think that's a big deal. But the 2-month continues to be way over 110 basis points difference at 5.377. I'm not good. This is not investment advice. Might be a good time to buy these 2-month treasuries. Yeah, or some of the other shorter term treasuries might be ready for a very big move. Not investment advice. That's just a look at things when they get out of whack. And right now, that is what is looking out of whack. Okay, let's look at oil. I did read where the oil reserves in the United States dropped again substantially. So oil is up 38 cents, but we're still looking at 77.34 this morning. Brent still also up 28 cents, but still 81.29, looking like it could go under 80. Natural gas down more this morning, down 2.15% at $2.14. That's not the recent low, but again, if it gets down into the under two, that would be a pretty substantial move. You've got now these kind of numbers could start to be adding up to recession. When you've got so little demand that these prices are dropping like this, that could be indicative. Gold up strongly this morning, 2.424. Let me look real quick to see if this is an all-time high. Whoops. It is, yeah, we are now at an all-time high. 2.424 is an all-time high for gold. So that is something to be paying attention to. Silver is up this morning, 0.39% at 29, still staying under 30. Copper down this morning at 0.6, 4.135. And the dollar is firm against the euro, but dropping pretty big, 1.38 against the yen. Still no evidence that the yen has intervened, that the Japanese have intervened on the yen. We've got the, Bitcoin rebounding this morning, up 1,271 at 67,000, call it. In fact, over 67,000 now. And there you go. That is what's happening with all the markets going back to check Tesla one more time. Still down 29 and 25 at 217.13. Okay, this is Randy Kirk. And listen, could you help me with Patreon this morning? It's been about 4 days since we've had a new person join Patreon. So maybe you could be the one. If you got an extra $3 a month hanging around, that'd be great. Or 5 or 10, then you could pick up some prizes. And then what else have I got for you this morning? Oh, yes. Yesterday's Brian White video, very good, excellent video. But, last night, probably that's the one you should watch. I hate to say that that Nicholas and I didn't agree 100% last night, but it's true. So it was a good, rousing debate about what really happened in the earnings call. You might want to go back and take a look at that one. I'm going to put that card up right there. Nicholas, sometimes he's right, but last night he was wrong. I'm sorry, no, he wasn't wrong. He just had a different opinion than I did. All right, that's all I got for you right now. It has been great talking to you.